Alright, Bitcoin double divergence fractal. Let's talk about it. So if you are a seasoned veteran of my channel, you would have seen me talking about this fractal that's been playing out for the past couple of weeks. After clearing up my chart and putting a few different oscillators on, I have noticed we also do have another fractal on the exact same chart. So clearing this up, let's talk about what we've got going on right now. I would also like to say we do have hidden bullish divergence over on the Bitcoin dominance. This is where the price is moving to the upside, but the RSI is having time to reset. It's looking like we're going to be going off to the moon very, very soon in terms of the Bitcoin dominance. I think altcoins are going to get wrecked, but what's interesting is this is also tying in with the hidden bearish divergence over on the Bitcoin price. So as most of you are probably aware, when the Bitcoin price moves to the downside in the macro time frame, you're obviously in a bear market. Bitcoin outperforms altcoins in a bear market, and subsequently the dominance goes up. So we've got not only double divergence in terms of the fact that the hidden bullish divergence is in agreement with the hidden bearish divergence over on the Bitcoin price, we also have double hidden bearish divergence over on this chart, and it is exactly the same, just like all the other fractals that we've got. So hidden bullish divergence is where you've got highs in the price action followed up by lower highs, followed up by lower highs, and this is happening while the RSI, or whatever oscillator you're looking at, we're looking at the RSI, has highs, higher highs, higher highs, higher highs, and higher highs. And this is a continuation pattern indicative that even though the price is moving to the downside, the market is becoming more and more overextended with every dead cat bounce back up to the upside. Now, you would have seen me, if you are a viewer of my channel, you would have seen me talk about this hidden bearish divergence for quite a while now. We've been talking about it since about 22,000 or so. What is interesting about both of these divergences is they both started off like this, with a much more brutal line of attack to the downside. Now, previously, this is when I first noticed the hidden bearish divergence. You've got, breakdown, touch point, 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 back tested it, and then you went off to the moon. But we just adjusted the trend line, and as you can see, we are still playing out this hidden bearish divergence. The longer it plays out, then the more bearish it will be, because subsequently, as you can see, if we broke to the downside when this hidden bearish divergence came into contact with this line of attack, so for example, if we went something like this and then broke to the downside, the RSI would have been breaking down at around about 36. And as you can imagine, the higher the RSI is, then the more room it has to go to the downside. So the fact that we had to move the trend line up in terms of the price action, so we had a less brutal line of attack over on this trend line. What actually happened was the RSI had enough time to take not only one extra leg to the upside, but two extra legs to the upside. And so far, over on this dominance pair, like I said, we have previously had it drawn like this. We've had that one extra move to the upside. It could be potential now. I would definitely like to emphasize, I don't think we're moving up to 21,500, but if we do play out this fractal to the teeth, then just like over in this price action where you come up once and get rejected, you break down, find support of the trend line, bounce back up and create a M pattern breakdown. And while you're doing this, you create a double top in the daily EMA ribbons and a lower high. If we do something like this, where you top off in the daily EMA ribbons, back test, come into the daily EMA ribbons again, maybe come up to the 21 EMA at 21,000, and then you solidify a double top M pattern breakdown into the daily EMA ribbons, then not only will this fractal be playing out in terms of the market sentiment at 32,500 down to 22,500, not only will this fractal be playing out to the teeth in terms of the momentum indicators, the oscillators, the market structure, the trend lines, everything that we did, but we will also be playing out a double hidden bearish divergence. This is very, very interesting because at this moment in time, we did have a brutal leg to the downside. I mean, we quite recently came down to 18,900. Well, this was today after the CPI report came out. And as we are bouncing, the RSI is once again starting to head back up to the upside. And once again as well, if we do something like this, and you do have that one last dead cat bounce to the upside before solidifying an M pattern breakdown, then you will be elongating this hidden bearish divergence, will be kicking the can down the road, and once again, the longer you take to break down, the more brutal the move is going to be. This is 100% emphasized in this hidden bearish divergence that played out for extra time, because once again, for example, if we broke to the downside, keeping our original line of attack, we would have been right here, because look, this is where we flipped back above the trend line and then we had to move over. So at this period in time, the RSI was down here at 37.7, and you know, from this breakdown down here, the RSI was at 35. So the fact that we're getting another leg to the upside could not only potentially mean that we will be solidifying an M pattern, but it can also be meaning that we will be 100% playing out this fractal and 100% playing out this hidden bearish divergence fractal. Once again, the longer we kick the can down the road, the more this hidden bearish divergence is going to play out for. Let's say hypothetically we have to extrapolate this over for another 3 weeks, because or not 3 weeks, but 2.5 weeks, 2 weeks. This is when we have the next GDP growth reports, FOMC meetings. So let's just say hypothetically, even though I don't necessarily think this is what's going to happen, let's say hypothetically for the next 3 weeks we do nothing but this and just keep on bouncing on the hidden bearish divergence. You can imagine the RSI is just going to get more and more and more overextended with every bounce back to the upside. So that is really all I've got. Just a very interesting fractal that is, you know, once again, not only playing out with the double hidden bearish divergence, but if we do bounce up and follow the hidden bearish divergence fractal from before, we'll be completely solidifying this previous trend that we witnessed. And you can also see, you know, the squeeze momentum indicator, other oscillators are heading to the downside. So in my opinion, we might be heading down sooner than anticipated. So I would not be betting for a move back up to 21,500, which could potentially mean that we have 100% correlation with this fractal. It is just something to note. The longer we kick the can down the road, the more brutal it's going to be. And once again, the fact that the hidden bullish divergence looks like it's starting to snap to the upside with the RSI starting to head up. The BTC-D is very flat right now, so, you know, bear in mind, we are just taking it one step at a time. We're waiting for that next leg to the upside on the dominance. But if this plays out, if the hidden bearish divergence plays out and the price of Bitcoin goes down, in my opinion, this will be time for, once again, Bitcoin maxi season, where Bitcoin heavily outperforms altcoins, and with that, the dominance would be taking the next leg to the upside. So this hidden bullish divergence on the dominance is in 100% agreement with the hidden bearish divergence, or should I say the double hidden bearish divergence, double whammy dominance, double whammy divergence rather, over on the BTC USD price. That is all I've got for you today, my friends. As always, Cowboy out. Peace.